these central systems can go down, and it can impact everything. I mean, we've seen, for example, just in recent days, Amazon Web Services had an issue, and countless businesses that you'd have no idea that they go down. You don't realize that they're running on Amazon Web Services. Imagine if they had 100% market share, right? And so it's the same thing with currencies, and that's why, I mean, most people that travel a lot, it's nice to have, physical currency with you, just in case, you never know when just your car is not going to work for some reason. You never want to be without payment, and if you're 100% reliant on centralized, internet-based technology, that's an inherent vulnerability.
Do you think we'll get to the point with Bitcoin where your banks will settle in Bitcoin, or your trade will be settled in Bitcoin? Do you see that as something that could happen?
Well, I think the longer it goes, the less outlandish that sort of scenario gets. I mean, if you were to call that when Bitcoin is 500, it looks sillier than when you call it when Bitcoin's at 50,000, for example. As roughly $1 trillion asset, it's becoming meaningful on the macro scale. I think if Bitcoin continues to get adoption and continues to grow in market capitalization and liquidity, it becomes increasingly useful as a reserve asset, right? So you start with the fringe countries, the ones that are either kicked out of the dollar-based system, or they're already dollarized and they want to, like El Salvador, for example, they want to do this move to attract all the tourists, attract the capital, lower remittance costs, a bunch of reasons, even just put their name on the global stage in a way that it wasn't a year ago. So there's those incentives. But basically, the bigger it gets, the more useful Bitcoin becomes as a reserve asset. It becomes another way for Russia, for example, to make themselves more sanction resistant. And again, I mean, you might not always agree with the countries that might use it, but if you understand their own incentives, you can see why they might become interested in that technology. And so I do think that the bigger it grows, essentially this uncensorable public ledger that's quite secure is attractive for individuals, companies, and nation states in many cases. And of course, it has to get big enough to attract those larger pools before they start taking it seriously. There's one of the common problems worldwide is how to store your value, how to store your wealth, right? Especially in this era where we're essentially in financial oppression. So interest rates are below the inflation rate. Usually in terms of the official inflation rate, let alone whatever the quote unquote real inflation rate is, you're not really keeping up with the creation of currency. And so there's people are monetizing all sorts of things. They're monetizing art more than they used to. They're monetizing their homes. So you have home value to income ratios going up dramatically. You're monetizing stocks where you say, I don't even know what the stocks do. I just want to shove money into an index fund because it's better than cash. So we monetize all these other assets. And so the world pretty much has a store of value problem, and it becomes worse for emerging markets that don't have access to a lot of, you can't buy fine art. You can't, real estate is trickier. You can't buy the S&P 500. And so Bitcoin is one that they can all hold on their mobile phone. And then, of course, you have countries like Iran that say, okay, we want to be able to buy things if we want to. And there's this permissionless payment rail that we could use. So there's also pretty much any actor out there can use Bitcoin for a purpose. And it's funny because if you look at old quotes, there are people that were Bitcoiners before that Bitcoin existed. Like if you look at Hayek, for example, he's like, the only way that you're going to have good money again is if someone can introduce a sly, roundabout way to separate money from state. He's basically describing Bitcoin before it existed. Again, Henry Ford talked about a currency of energy and that gold was too centralized.
Sovereign individual.
A lot of people discuss this thing. And so it's kind of remarkable that it happened. And I think we can envision now two very different futures. So we know that money is going to be increasingly digital, more so than already is. Right now, we think of it as digital. People joke and they're like, well, the dollar's already digital. It's like, well, it also runs on those very old pipes, for lack of a better word. There's this old legacy infrastructure, and then we interact with it in a digital way, but it still goes through these centralized pipes. And stable coins are quite different ways to transmit value. Obviously, money's going more digital, and is it going to be more state and surveillance controlled, right? So almost like using Satoshi's invention against him, where this technology can enable CBDCs, it can enable essentially highly regulated private stable coins that might as well be CBDCs. For example, they can blacklist any addresses they want, they can block transactions. You have that approach, or you have Bitcoin, where it's kind of a defense against nations that are maybe being improper.